Good morning, everyone. This is Mr. Taher Jaber from Ajyal School. We are still in Chapter 3 Business Organization, and last time we have covered the, the type of business organization, or what we call forms of business organization. We have discussed the three forms of business organization, and we have talked about the last one, which is called corporations. I just would like to add one more things to this form, which is the structure of the corporation. Let's say we have owners and the stockholders. They will elect from them the board of directors, whom they will select the president of that corporation. And the president will hire the manager or the vice president of sale, production, and finance. In this department, sales department, there are two different type of employee. One will focus on domestic sales and the other will focus on international sales. In the production department, we also have two different type of employee. One will focus on quality control and the other will focus on research and development of that product. In the finance, they will focus only on payroll. Let's continue our new lesson, and talk about section 2, which is business growth and expansion. Here we'll talk about how do businesses grow and how do they expand. Business can grow in two different ways, either through reinvestment, which is reinvesting their profit on plants, equipment, and even products, or by doing a merge with other companies, or what we call merger. So the definition of merger is a combination of two or more businesses to form a single firm. It does have some risk, and the two risks that it has is that these two companies could have different cultures, or by combining their product to produce a new product, this new product might not be liked by our customer or consumers. Now we'll talk about the first one, which is reinvesting. Most businesses, they use what we call financial statement, which is to track businesses operation. There are different type of financial statement, but the most important out of all these are what we call income statement. We'll talk about income statement and look at an example of it. So income statement, it's a report. You will see it in a minute. This is a report that shows business sales, expenses, net income, and cash flow for a period of time. You will see it in a minute. Why did we say for a period of time? It has a short period of time. So we can use the income statement to show how those businesses can use some of the revenue it received from sales to grow through reinvestment. Let's take a look at it. We have the sales, we have the costs, we have the net income, and the cash flow from the net income will be divided into two parts. One part will go to the shareholders, and the other part will be for reinvesting on the product or even on marketing and so on to have a bigger sales income. Now we'll talk about the other type of business growth, which is by merging. When two companies they merge together, they will form a bigger company. So their company would have grown in size. But when merging, we have to consider the new name of that new company. For example, this new name should put under consideration the previous name of those two companies. Here's an example: the Chase National Bank and Bank of Manhattan, when they merged, they have formed what we call Chase Manhattan Corporation. So the type of merge, we have two different type of merge, something called horizontal merge or vertical merge. Horizontal merge happens when two companies are dealing with the same product. Let's say, for example, a company for money exchange and a bank, they merge together since both they are dealing with the same product, which is cash money. That kind of merge is called horizontal merge. But when two or three or different companies produce different products, but they depend on each other, for example, here, let's say we have a company that cut trees and produce woods, and we have other company that create baseball bat, and we have a third company that deliver and distribute products. When these three companies merge, it's called vertical merge because those three they depend on each other. For example, the company baseball bat could benefit from this company by using its wood, and also it could benefit from this company to produce to deliver their products and for distribution. Let's look at why do company merge. There's so many reasons. Some of the reason is to grow faster. Every company always look to become one of the largest company around the region or even around the world. So to grow faster is one of the reasons why they merge. Also to become more efficient. When two companies merge, the cost for management will decrease. So they won't have to pay for two managers, they will pay only for one manager. And also for better discount by making volume purchases. When two companies merge together, they can purchase a bigger stack of the resources that they need to produce their product. And more objectives can be achieved by this merging. Also to acquire or deliver a better product to enhance the production of a better product or to eliminate competitions or to change its image. Let's say one of the company, it has a bad image, so it has to merge with another company to cover its identity because its reputation have been going down. Now, when corporation may become so large because of the mergers, okay, and it turns into what we call conglomerates. So the definition of it is a farm that has at least four businesses, this is an example, each making unrelated products. See, each of these company, they're making product that's not related to the other product. For example, it's focused on media, this one focused on sport, phones, farms, and so on. And none responsible for the measure of its sales. See, the major sale of the big company, see, I can't say that this company is responsible for that big sales because it's divided by those companies. Now, the second one, what we call as multinationals. The definition is a multinational is a corporation that has manufacturing or services operation in a number of different countries. An example of it is Honda, McDonald's, Coca-Cola, Adidas, Samsung, Sony, Microsoft, and so on. Thank you for listening and for watching. Next lesson will be our final lesson for this year. Please stay safe, and I wish you all the luck. Thank you very much.